Can you guys hear me? Oh, okay, there we go. What is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody live on YouTube and on X. As always, chat is open. Questions, comments, stocks you want to look at, whatever it is, drop it in there. We actually will be doing our usual, going through the overall market, sectors, industry groups, stocks. Also got a couple questions about my weekly and daily routine, so I'll kind of give you guys a walkthrough of that. And yeah, other than that, we'll get everybody ready to trade for next week. So without further ado, it's time for the rapid review. All right. As you guys know, there's the disclaimer: informational and educational purposes only. Financial investment, not financial or investment or trading advice. All right, let's look at the trend. My stance, we're in an uptrend. I think everybody's stances were in an uptrend. Excuse me, exposure levels. We're looking at 80 to 100% exposure, definitely towards the higher side of that. I think most people are looking for that 100% exposure. I know some people even on margin, even one of my accounts, I'm slightly on margin. Looking at the Webby 3-day trend, uptrend on both the NASDAQ and on the S&P. My 50-day trend, which is more of a longer-term trend, that's uptrend both on NASDAQ and on the S&P. And we're sitting about 0.5% off of all-time highs on the S&P and on the NASDAQ. We are now 23 days since the official rally day. So it has been a few weeks in the uptrend, and let's see where we are at. For index performance, you guys can ignore that part right there. But for index performance for the week, the S&P was up 0.9%, NASDAQ up 1.12%, Dow up 0.55%, and the Russell up 0.93%. Closing range, S&P 74.3%, NASDAQ 85.1%. So in that upper range, which is very, very positive. Dow in that mid-range of 61.8%. But Russell closing near those all-time highs, 96.8% for those small caps, which is a positive sign, especially for growth stock traders. For the year, S&P up 4.33%, NASDAQ up 6.45%, Dow up 1.62%, Russell up 10.99%. Looking at the moving averages, we're above them all. They're all in the proper order. The 10, this is something positive that we've seen in terms of how rapidly we moved up. We've seen us tighten up to the 10. We've seen us start to tighten up to the 20. And 50. Everything's starting to catch up as we've seen some sideways action that we'll look at when we look at the indexes. Let's do that right now. Let's jump over and take a look at what's going on the charts. As we always do, we'll start over on the NASDAQ on the daily. So this was one of those weeks that I had made a couple comments over on X and everything, specifically on Tuesday. Tuesday was when we got that OpenAI news. Market reacted to it. We also had earnings coming out this week, so I think that was also partially the reaction and maybe some of the concern of earnings coming out. But for some traders, it was like the world was ending. AI was done. It was it. AI doomsday. And when you really looked at what was going on in the overall market, there was really nothing to get concerned about. And I kind of put a tweet out and I was talking about that in Discord. And as you can see, we ended off the week where it was like, that's a nothing day. People forgot about that day. We're back above those highs. Most of the stocks that got hit, most of them recovered from there. So this is why I do this every week. I think it's very important to understand, have context of the market, have a plan, know what is just normal price action, what is an expectation breaker, and should have you maybe adjusting your risk or acting specifically. I'm talking about this outside of your stocks, but you should be doing that as well. So this is why I do this every week, and this is why I drill having a plan into all of these kind of talks that I do because of how important it is. So looking at the week, we were up on Monday. Volume was kind of lighter. Then on Tuesday was when we had the OpenAI news. We gapped down. We kind of pulled in right to the 10-day simple moving average, right to it, bounced, and then closed in the upper half of the day. So given everything that had happened on Tuesday, really not that bad of a day. We kind of continued to move a little sideways on Wednesday. Thursday, we saw some pretty heavy volatility. We gapped up, then we rolled over, broke below that 10, and then found support again, closing near those highs, which was also seeing that just kind of third test of that 10-day simple moving average, and still seeing the bulls buying in at that price level was very, very positive. And then we finished off the week real strong. Gapped up in the morning a little bit, rallied throughout the day. We pulled off of the highs, so not like the most bullish, strongest close, but still very, very positive action. And just again, that big support, finding at that 10-day simple moving average, seeing that big money in those institutions did not want to let that drop below that 10-day simple moving average. Those all-time highs, super positive. The big question is this the only pullback that we're going to get? Is this the pause of the market that we are going to get in what everybody is rightfully calling a lockout rally, that we rose up just up day after up day after up day, broke out of this sideways range, made it to all-time highs, gapped up, and then kind of sat and paused. And now it was like, okay, are we going to pull back? What's going to happen? Which is also why I found Tuesday very funny, because everybody's sitting there saying this market's so extended. This is a lockout rally. We need a pullback. This makes no sense, whatever it is you want to say. And then we get that day on Tuesday, and it was like all of a sudden it's like the world's ending. Like, what happened to we need a pullback? What happened to pullback would be normal action, or sideways would be normal action? Like, just people, money makes people just, their brains just go crazy, and people just kind of put it aside. So really, really nuts. Yo, what's going on, Mac? Mac over from Discord. Shout out to everybody over on Discord. Appreciate you guys joining. But yeah, so again, just putting everything into context, everything really acting healthy. We're still wondering, are we going to get a pullback? Is this just, like I said, all we get? Nobody knows, but time will tell. And it is at least good to start seeing these moving averages catch up. And then good to see us react at that 10-day simple moving average. At least test that. We all know at some point we're going to test the 21 and eventually the 50, but we'll see when that happens. Looking at the weekly bars are just absolutely beautiful. With just 1, 2, 3, 4, 5 up weeks in a row, 5 weeks in a row, closing near those highs. Higher volume on these 2 weeks, lighter volume on this week, which I think was a lot of the hesitation going into the earnings of a lot of these big names, Google, Amazon, stuff like that. So somewhat expected to see that kind of pause and hesitation where people aren't wanting to jump in, wondering what those earnings reactions are going to be. And, overall, I think the earnings reactions were very positive for the overall market. Yeah, some names did get hit, but overall, I think things were kind of positive on the earnings side. Weekly here, because we're already here, will look very, very much the same thing. And then on the daily side of the S&P, very, very similar action, right? Testing that 10-day simple moving average, making to those all-time highs. A little worse of a reaction for closing out, just coming off those highs. But again, still an all-time high close. Nothing really to get too concerned about. So that's what we're looking at really on those indexes. I'm bringing up the Russell just because this kind of had that little bit more of a pullback, shakeout through this area, and then a good to strong reaction, which was positive. Dow, I'm not really too concerned about. All right, but let's look also distribution days, because that's something that's important for us to just see if we're seeing some institutional selling coming in. And then for this week, we added 1 day on the S&P, which was on Tuesday, the 28th. We had 2 days gained last week on the S&P and 1 last week on the NASDAQ. So that brings us to 3 and 1. Very, very light, nothing too concerning. And as you can see, we're above all those. Very likely we could see the NASDAQ, if it continues to climb, to wash out this day. Would take a pretty significant move to wash out any days on the S&P. But overall, yeah, definitely looking nice. You can see here. All right, this is in the last 25 days. These days have fell off. It's just much, very, very different from how it was when we were in February and March, where it was just a lot of days, a lot of red on here. So good to see this kind of starting to see that selling lighten up, which is pretty obvious as we've kind of ran up. All right. News-wise, events coming up for the next week. We have the Fed meeting coming on Wednesday, which that always pay attention to those. Just the market tends to react to stuff that's said there. That's as far as I really get involved in these meetings, just understanding there's some sort of event, just like earnings, that can cause some market volatility. And then jobs report coming out on Friday. Other than that, nothing else going there. Earnings were still in the, wouldn't say the height, but we're still in the mix of earnings. As you can see, long, 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 long list of earnings. This is the criteria I'm looking at. Just stocks, $15. Actually, probably should change this to dollar volume because I use dollar volume now. But and a 500 million market cap. But you can see there's still a lot of names reporting. I'm sure when you're looking at your kind of watch list and your uh, current positions, you're seeing that some of the earnings are coming up. As for that, look, it's very, very important. Have a plan, have your rules, on how you approach earnings. Also have your rules on how close to earnings you're willing to buy something, because that's what I've noticed a lot too as we get into these earnings seasons. Um, in this time period specific, there are some names that look like they're setting up, but there's that concern of earnings coming around the corner. I personally, once I get inside of like that 10, I'd say sometimes I'll go inside of 10 days, but really once I get inside of like 7 to 5 days inside of earnings, the likelihood I'm going to be able to get my cushion for that stock within that time frame is pretty slim. So I rather wait and let something go on without me, just because of that added risk of trying to get into a name and hope that I can get the cushion that I need. Because very often leading up into earnings, you're going to see kind of price action kind of calm down, volatility decrease, because a lot of people are kind of waiting to see what the reaction is, not as much buying and selling coming in there. So something to take note of. All right. Now let's talk about sectors. So let's look at what we had for the week. All right. So leading out the week was energy. That was a big leader for the week, up 3.5%. Then we had real estate, consumer staples, tech, and tech was in the number 4 spot for this week. So a little weaker in the price action. I think a lot of that due to the Tuesday being the day that tech really got hit, and then kind of playing catch up from there. But when you look at the overall ranking, Tuesday, tech in number 2. Then you got communications, and the rest you can kind of see throughout here for the week. But when we're looking at really what we're looking for the actual rankings, you have energy, tech, industrials, materials. These 4 names, I think most of us are seeing that coming up on our watch list. Healthcare and financials. Financials has had some like strong days, but still in an overall downtrend. Healthcare, another one of those lagging groups right now. But really, when you look at the stage analysis, right, we see consumer staples kind of in that later stage 2, and then you have energy, technology. These are all kind of stage 2 uptrends looking in these groups. Other than that, that is really all we have on the sector side. Let's actually look at Deepvue real quick. For those of you who don't know, I'm a Deepvue partner. This is the tool I use for all my stock screening, fundamental analysis, technical analysis, a little bit of everything. Let's bring up those sectors and just kind of take a quick look through really the weeklies. I like to look on this. So energy looking like, look, it got hit last couple of weeks. It's starting to kind of rebound. So could this just be some basing action? 100%. Consumer staples not looking great. It looks like maybe it's trying to bottom, but nothing that's really writing home about compared to these other groups. Real estate definitely looking strong, right, as it's starting to hopefully come out of this sideways action. So we'll see if it can do that. Technology, that's just completely ripped. Communications, sideways action. And financials, like I said, this is what I was talking about, financials. So, financials, maybe this was like that first higher low that we've kind of experienced, but we're still underneath the 200-day. So nothing really great here. There's been some real strong days, but we're underneath that 200-day. Utilities kind of sideways, healthcare, garbage, industrials looking like maybe like a cup with handle type of pattern there. Consumer discretionary kind of V-shaped recovery into a pullback handle, whatever you want to call that. And then seeing some real strong action the last 2 days. And then really here, it's like that V-shaped kind of recovery of like a cup, whatever you want to call it, with handle. And then you got your materials looking, a lot of these materials, a lot of the gold, silver miners having this action of like that recovery, made like a higher low, and then now it's kind of been trading in this tight sideways action. So something I kind of want to pay attention to. But at the end of the day, tech is where it is. Tech is where we're paying the most attention, and energy is the number 2 spot, I would say, where we're seeing that strength. So yeah, that's what we got over on our sector side. Industry side, we'll jump over to my industry group rankings. Let's first look at what kind of went on during the week. We'll look at the leaders for the week. From a weekly side of things, semiconductors, memory, really leading out the week. SanDisk reported for this week, kind of a weird reaction, after hours reaction, then end up turning positive, but somewhat expected given how extended that stock is. But overall positive. Rare earth and critical minerals. This one keeps kind of popping up. Something I'm going to be paying attention to. Quantum. We'll look at the quantum ETF and some of the quantum stocks just because this is continually showing up more in a downtrend. Kind of reminds me a little bit how solar was acting last year, where solar was in this kind of downtrend, but we kept seeing some strength coming into those names and the possibility of that trend changing to an uptrend. So we'll keep an eye on that. Not really worried about the healthcare, construction names. We've been seeing that. Oil and gas, like we said, energy leading out the week. Not worried about this. And then some software cloud infrastructure showing strength. On the downside of things, like I said, the copper miners, the gold miners, keeping an eye on those, silver, keeping an eye on those and just seeing how they react. They've definitely been showing more weakness though, so trying to kind of stay away from that. But when looking at the overall ranking, and these are all my own custom, I went through over 3,000 stocks and built out my own custom industry group ranking system. And look, memory leading out. These are the names. Those are leading. And then you got this AI data center networks. And so you can see these top groups, these top stocks are what are actually contributing to the metric and the ranking. And then the secondary exposure is just some names that I believe are tied to that move as well. And I want to make sure I'm looking at, but not necessarily causing it to be sitting in that ranking. But really the thing here, if you're looking just quickly, and really what I like to look at is that top 20. It's really those semiconductors. We're seeing some oil mixed in there. Space economy has started to kind of drop off. Space economy, which is, just so you guys can see, these are names like this, was showing more strength and it started to kind of fall off. You can see this velocity indicator that I've built, -6. So it's starting to try to drop down through the rankings. Crypto mining, another area to kind of keep an eye on that's been showing some strength. And energy storage, falling into that energy space. And let's see, did shipping fall off? No, shipping and marine. That's another area that's been showing strength. So like we said, the tech, the energy, shipping, that seems to be where the money is flowing to and where I want to kind of focus on most of my new buys. All right, don't see any questions on anything like that. So let's jump back to Deepvue and let's look at some of the stuff going on with these ETFs. So here we have hydrogen. You have a weekly here, and then weekly here, daily here, so you guys can just kind of see the context of what we're really looking at. So hydrogen is really showing some strength. Cannabis really in a bigger downtrend still. This is that rare earth. Some of these starting to break out, that rare earth and strategic metals. It's kind of given, not really, I can't even really call this VCP because of this kind of drop bow here, but still looking good. Mac just got done with my weekly watch list scanning. Nice, dude. Awesome. Oil refineries, cloud computing, and overall downtrend. Oil, autonomous vehicles, and EV stuff kind of climbing. Semiconductors, right? So semiconductors, super, super strong. Clearly the leading group. I've heard people say that like semiconductors are the new oil of the world economy, and I could completely understand that, where they are basically embedded in pretty much everything that we do, from I mean, everything. And then obviously you could see the Tuesday kind of big drop off, but that really only pulled us right into the 10-day, just like the market. And then it kind of continued higher. TCOM. Let's see. Let's go to Quantum. There it is. Quantum. So Quantum as an ETF is kind of making a big move, but I think it's important to understand when you're looking at Quantum as an ETF, you're going to see there's like the Googles, the Qualcomm, some of those like bigger cap names that have done well, AMD, like a lot of semiconductors are falling into this quantum space. So what I like to do, Deepvue does have a thematic watch list for quantum. So here you can see there's, right, you have some of these quantum names that everybody was looking at last year still below the 200. Form looking good. Form being one of the leaders in that space and something that I really want to be paying attention to. Should make sure I have this on my long-term watch list. I do not. Okay. Well, now I do. But a lot of these other names really looking weak and sitting below the 200. So as much as Quantum, some of these like Google type names are showing strength, Form showing strength, the other quantum names, they look just, they're still below the 200. So even the ones that are looking like they're showing strength recently and trying to get back up towards that 200, this is just too deep or something I don't really want to be worrying about yet until like we can get more of a sustained uptrend. Like you can see Stan-Weinstein stage 4B right there. So yeah, that covers that quantum stuff. Other than that, look, I think most of us are looking at the same thing. Like it's semiconductors and it's energy. That's the two big groups that are showing a lot of strength. And then we're kind of keeping an eye on some of those other groups that we had just mentioned as possible kind of areas that might be turning around, showing some strength. Next, said our goal as a trader is to trade stocks in the top industry and themes. Yeah, absolutely. Look, and I know there are people that trade slightly differently than I do. My goal is to be focused in those top, specifically in my thing. I kind of look at those top 20 groups, knowing that if I'm in a strong trending market, if I'm trading the leading industry groups, and then I'm trading the leaders in that group, my probability continues to increase with catching bigger winners. Not to say that I will never trade a stock in those group that's not in those top groups. Not to say that I will never take a trade when the market isn't super, super strong. It's just I'm pressing on the gas when everything lines up. When we have a strong market, when the industry group is strong, when the stock is strong and everything's breaking out, it all lines up. That's where I'm pressing the gas the hardest. And putting things in my favor to see success. But I do know some people don't really care much about the industry groups. I know some people look bottom up from the market. That's fine. Everybody's got their own way of doing things. This is just my approach. And I do also, in my screening, take that bottom up approach as well, which we'll talk a little bit about when I go into my kind of weekend routine, because I know that was a question. All right. Let's see. Other than that, I think that's really all we got on the industry group side. Doesn't seem like we have any questions. So let's start talking about some stocks. Let me pull my phone out for this one because SAG over on Reddit had asked me to look at a couple names. Okay. So, quick update of my portfolio. I was stopped at a Roblox. Well, not Roblox. I always do that. Rocket Lab. I got stopped out of this one right here on, that was Wednesday. So took a loss on that. Is what it is. Kind of found some support at the 50. Starting to still act choppy. Still keeping an eye on this name. As you can see, it's on one of my watch lists, but another one of those names that have earnings coming out. So, but yeah, I took a loss on that one. No big deal. Was actually one of my smaller positions given the ATR of this name. But other than that, we got A-Lab over here, still in this name, MU, SanDisk, and Taiwan Semi, kind of what I'm holding right now. I'm a little heavily weighted to the tech side, right? So something to just kind of be conscious of on my end. We got energy storage here, but then it's like we're kind of pretty strongly correlated between MU, SanDisk, and Taiwan Semiconductor. But again, it's where the leaders are right now. So it's kind of hard to just disregard these names. All right. Let's see. I see some industries, they are either trading earlier, but after the market bottom, they are either basing or underperforming the market list of stocks. And this is, I'm reading this because I know everybody on X can't see this. And I also see some industries that were in a downtrend, then they bottomed either with the market or some days earlier before the market, and they are underperforming. So my question is, should we focus on these industry groups to focus on breaking out stocks, or should we find stocks in those industries who are outperforming the market after the market bottom? All right. So for me, this is where timing becomes very, very big, right? This is why not disregarding a follow through day and trusting that follow through day and focusing on the leaders at that time is so crucial and important, especially for people who are trading CANSLIM style trading, especially people who are position traders, and even to an extent, people who are swing traders. Because if you don't buy those names around that follow through day or start testing those names around the follow through day and the few days or a week or two after, a lot of the leaders are going to go on without you. They're going to be extended, and it's going to be hard to get in and assess your risk, especially when we get into a lockout rally like this. So the first piece of that is, this is why it is so important to be doing what we're doing, to be watching for that follow through day, to be willing to, I was short AMD. You guys know that. It's all, you can go back and see the recordings. I was short AMD. And then I got stopped out, and I quickly, in like a week, went from short one position to I think I went from 0 to 60 or 80% long in like a week's time. That's why it's important to be able to do that, to be able to flip the switch when the market starts telling you things, when the market keeps proving itself day after day after day, and the breakouts and the leaders keep showing. Now, if you find yourself in that situation where maybe you did not make those buys earlier on, and now you're underexposed, or just at a position where you're looking at these names and you want to add to, let's say maybe you're just not underexposed, maybe you got stopped out of a couple of names. You bought around the follow through day, but now you're still looking to add. There is two different looks at it. You could just be patient. You could say, I'm going to wait for the leader to give me a chance. I'm going to wait for the leader to pull back or give me an entry. That does not always happen. There's the approach of, I just need to find some way to assess my risk and buy what is leading. Bill O'Neill did that. Mike Webster talks about this a lot recently, how, believe it or not, Bill would buy extended if something was strong enough. Remember, he was a position trader, though. He was a lot longer term, not like a swing trader. Then the other option is, I'm just going to take trades that are setting up that assess my risk, and they may work out. So there's a lot of different ways to approach it. Personally, I want to focus on those leaders. If I was looking for other areas, and if I see an entire group looking like it's turning around, that's why I kind of look at a lot of these other industry groups and say, oh, it looks like I'm seeing a ton of stocks in this group, or I see this sector looking like it's trying to make a turnaround. That will make me willing to pay attention to that and possibly make a buy in that. What I really don't want to do is, I don't want to be buying a laggard, in the sense of something that is just clearly just lagging. But if I see a group that looks like it's potentially making an attempt to make a breakout, and maybe it's not the top leading group, but it looks like it's getting ready for an overall group to start trending fairly well and even possibly climb up through these rankings, I'd be willing to test that. The key to me is, I don't want a portfolio full of those. I want the majority of my portfolio in those leaders, and then maybe a smaller percentage of my portfolio in maybe stocks that aren't in leading groups, but multiple ones are looking like they're breaking out, or it looks like things are turning around in the overall trend of that group. Or sometimes I even find Life 360 was a perfect example of this last year. Mac, me and you have actually talked about this between the two of us. It was one of those stocks that the fundamentals and the setup were just super, super strong, and it had nothing to do with industries. The market was in an uptrend. It had nothing tied to it other than this was a really strong stock fundamentally and a really, really strong setup. And I was willing to take a pretty big position on it. So It's not a hard, fast rule that I need to buy within those top 20. It's just that's where the majority of my trading needs to be focused overall if I want to really kind of be seeing success. So hopefully that answers um, your kind of question that you had over there, Mac. So looking at Sag over on Reddit, he mentioned MU, I believe. Let me put some context to this. I'm not sure if he owns it or not. All right. View on MU. I think MU is a leader right now. All right. If we're looking at things on a weekly, this thing has acted beautifully from the bottom. We've come up now 70%. You're looking at that relative strength, 12-month, 97. 3-month, 87. 1-month, 94. So clearly showing a lot of relative strength. Liking the fundamentals on this one. Triple digit in the last couple of years. Strong sales growth. Triple digit accelerating sales. Leading semiconductor group. Not the strongest return on equity, but still something to take note of. And increasing institutional funds in there. So when I'm looking at this, it's to me, and I own it, as you guys know, to me, it's a clear leader, and it's been acting very well, and it's barely done anything but test the 10-day simple moving average as it's kind of broke out to all-time highs through this area. This was also a name that right around here, when the market was acting poorly, people were starting to buy this. And I personally said, I understand this can go on without me, but I'm willing to let it go on without me because the overall market was just so bad. And I just wasn't willing to take long trades in that time. It ended up failing. It ended up making a newer low, breaking severely below the 50, climbing up, and then starting to show some, gapped up. We had tight action here. This is actually, I believe this gap up through here is where I kind of bought it, reclaiming that 50. And then I kind of added, I believe, somewhere around here. But yeah, clear leading stock to me. And in terms of getting into this one, unfortunately, this needs to do something to pull back, to set up. It's kind of gone and went from here. Next one, over from SAG, you got, I believe this Viacom. Is this Viacom? No, it's not Viacom. That's spell that right. Viva Solutions. Let's see. All right, so we had an earnings reaction on this one. First, looking at the fundamentals, accelerating sales, very, good, strong earnings, a good year of earnings last year, good year sales last year in that communication sector, which we've been seeing some kind of strength within the communication sector. As you can see in the sub-industry group here, we're looking at 3 months, 8, 16, so in that top 20, which is definitely positive. We're seeing some increase in the funds in here. Not great ROE, but strong relative strength. Even on these, which this is sometimes even a quick check, right? 99 on the composite, 84 on the fundamentals, EPS 94 sales, not 86, staying Weinstein stage 2 uptrend. Looking good. Now, this is kind of, let's look at the weekly because I don't know why I'm doing this. This is taken off, really, really taken off and gone pretty vertical. We had this gap up on earnings, but we were already somewhat extended. The question here becomes like, where do you want to put your kind of stop? Where we're at right now, we're about 10% off of that gap up low. I would probably want to see, an inside day, which is good. I would probably want to see this kind of pull down towards the low of this gap up on the 30th for me to possibly take an entry on this, just to give me somewhere to assess my risk, but also just understanding that this thing hasn't based at all since like the beginning of the year. It's kind of been running up, gapped up, now moving sideways, but there is looking like there's a ton of volume pouring to here. On a real positive earnings reaction. So that would just be my way of looking at it. The stock looks great. It's definitely performing strong. The fundamentals look really, really good. So I definitely like the look of this name. It's a communications name, right? Network Test Monitoring Assurance Solutions Communication, First Responders, Aerospace. So I don't know. This is what's also cool here. So why I love Deepvue. I can come in here quickly and just say, what do they do? And this will give us an assessment of what it does. Global leader in network test measurements, monitoring, provide solutions, field testers, Ethernet assurance, lab equipment, optics, and we can kind of keep going back and forth with the AI to get more on that. But yeah, so very, very strong. But just for me, it's like it's a little extended in general. And if I am saying, well, look, it gapped up strong on earnings on really high volume, I think this could be going even more. I would prefer to be able to at least shoot a stop off of that low right there. Non-leading stocks, cat. Yeah, you know what? I had cat on a watch list, so we'll bring that up. I got one more. We'll go one more for SAG, and then we'll pull up cat. And then Mac, I see you got a couple on there too. Okay, so unusual machines. Love that name. That's super interesting. Sales looking good, like good sales. Earnings kind of crap. Yeah, you guys can see the fundamentals here. It's not a horrible name, but it's not also a really, really strong. Like the fundamentals aren't that great. Mostly the earnings. The sales are pretty good. But we also know, especially in a lot of these tech names, the sales sometimes is more important than the earnings. So, and that's something that we've seen. Drones, which we all kind of know, this is definitely a group that probably is going to be changing the way we work, live, play, fight, everything. Earnings coming out the 7th. So right then and there, seeing that we got earnings, Monday's what, the 4th? 4th, 5th, 6th, 7th, coming out next Thursday before the market open. I'm not willing to enter on something like this, but just looking at what's going on, look, it's an IPO. We've been kind of going through this sideways action, which is pretty cool to see us. Come on. Oh, there you go. To see us in this sideways action. The volatility definitely decreasing. We can see just kind of shooting this kind of trend line right here. We've kind of had this rapid pullback. We've kind of started wedging up. We've made a couple of tests over here. It's a smaller cap name. It's a higher ATR name. So, higher flyer, definitely want to kind of pay attention to that. But overall, I think when you look at this from a big perspective, it is something that looks nice. It looks strong. What are we off the 52? We're very, very high off of that 52-week Uno. So there's a lot of room to make up because this is such a high flyer. So the question becomes, do you want to try to buy this inside of this kind of big, deep pattern that started going from the 2024 timeframe where we're getting these breaks, but then we're kind of breaking down. We're kind of just wedging higher on a high volatility name. I don't know. That's up to you. To me, I'd probably rather not. I'd rather, if we got really tight closer to these all-time highs, like if we form tight towards this upper line and got some like really, really tight action to assess a risk, this would probably be really, really interesting name to see it, breaking out on multiple time frames. But I think this is personally, I just want to see this kind of work its way up because it's very likely that what we've seen throughout here, right? Just this choppiness. I mean, look, like let's say you even bought through, let's just say this area right here, right? And it ran up 50%, but then it dropped down 36%. So you're just getting kind of a lot of swing highs and swing lows. Very, very choppy action. What did I do? I want to do that. So very, very interesting name. A very interesting name. I just think this is something that for me is just a little kind of wait and see and looking to see something more closer to this 2338 high area before I started to consider if I would personally buy it or not. Oh, okay. All right. So more context. UMAC is my weakest stock. It's my smallest position, and I'm testing a new strategy. Yeah, that's fair. Look, I think there's a lot of constructive things about this. You're testing a new strategy. You're being honest about what you're doing. You say it's a smaller position. I'm sure knowing you and knowing some of the conversations I think we've had, you're a person that is still managing his risk. So yeah, I think as long as you're managing risk and you understand what you're doing and you test something out, that's fine. But yeah, constructive name. I personally want to wait till it gets a little higher up there. And if I was taking a trade kind of deeper in here, it'd be more of a swing trade for me. And then my final question I always tell myself is this name where I want, like, is this really where I want my money in what feels like an extremely strong market. That's the other thing. Or would I rather have my capital allocated somewhere else where I think it's going to be working a little more for me? But yeah, I can see you also arguing, well, I'm going to get a quick swing and make a pretty nice quick profit out of this if I can get a tight area to assess my risk and give me a small stop. Like, let's just say even somebody who's like, oh yeah, I'm buying this downtrending line. Sorry, I'm spending a lot of time on this one, but it's just interesting to me. Right. There's this kind of flagging. I mean, you can obviously draw all over this thing, but right, we're getting flagging, we're getting tightness. I'm just going to assess my risk off of a break above this line. That's still a 12%. So maybe, guys, it gets tighter over here. You get something where you have a nice tight stop, and you say, well, look, it might pop and break, and we might get some action where it goes up 20, 30, 40% in a couple days, and then that's a nice quick swing trade for me. Fair too. People trade differently. Very, very differently. So 100%. All right, let's play some catch up. My bad, guys. Where are we? Considering the price action of IGV or Cloud, will you trade stocks in this theme? IGV. Let's see. This over. IGV. Okay, so looking at software, no. Instantly, no. Just not, like, software is weak. We're in a downtrend. Not something I'm interested. Cloud. Like I said, cloud, we're starting to see some strength in cloud, but again, like, it's just, we're still on a downtrend. So personally, no. And it all comes back to, why am I going to put money into groups like this? I do see, like, we had this huge gap up on a ton of volume. And I know that sometimes when you got some of the KQ type traders, they say, all right, well, if it was done on news and you get that like episodic pivot type of move, this could be an opportunity to be buying something as it's coming off the lows. If that's part of your style, that's good. But for me, you know, I trade my style. I don't have to trade every little setup and every little thing. For me, I see cloud being of interest, but I'm not looking to buy anything in that space just yet. Cat. So, okay. Cuckoo, Coco. Sorry if I'm pronouncing that name wrong, but for this one, oh, I spelled that wrong. So, God, I can't type. Oh, it's because I'm hitting the wrong button. All right, so this was one that I had on my watch list. Construction has been showing strength. And this name looks good. Look, we got accelerating earnings. We got accelerating sales. The annual, not the greatest, but still accelerating. It's definitely in one of those leading groups in the construction space. It was showing relative strength. It was showing increase in institutional sponsorship. This was on my watch list. I just bought other names. Yeah, I think especially seeing just this price action, right? It's just been trending upwards. We had a base form here. It broke, retraced, and then broke again. And I think a lot of people might have really liked this day right here on the 17th. Pulled back into the 10 on lighter volume, gapped up on earnings, and continue to go. So no, I think this name does look beautiful, and it was on my watch list. I just went with other names. As for non-leading groups. So, and that's the other thing I would say. I wouldn't say that, like, Caterpillar is definitely not in a non-leading group. Definitely not in a non-leading group. Construction stocks have been showing some strength. It's not semis. Like, don't get me wrong, it's not semis. But it's definitely in the upper echelon of some of these industries and how things have been performing, right? Actually, let's just go. Where are we? I thought construction was in here somewhere. Did it drop down a little bit, maybe? Where are we at? I could have swore I saw some construction in here. It's starting to climb up, construction, machinery. And that was what I was going to say. A lot of these names were kind of reacting to the mining stuff, and that's when it was really. It might have been up here a little earlier because of like the mining stuff, because a lot of the mining stocks are showing strength, and some of these metals. Oops, did I lose my slides? I did lose my slides. Let's go. My bad, guys. That's not it. That's you guys on. That's you guys on X. That's not you either. I did lose. Oh, here it is. All right, now that's wrong too. What is going on? Bear with me. Bear with me. Yeah, for some reason, all right, I lost those slides. All right, but you guys got the gist of what I was kind of talking about. It's back to Deepvue. But yeah, so definitely, I think this group is strong. It's extended now. And if you want to use one of those kind of earnings gap up type of entries that we've talked about that a lot of people use, then fine. But yeah, I would definitely not say this is a non-leading group. It's just not the top of the top. But yeah, if you look at like the Deepvue rankings, it's showing number 1 on the 3-month. Number 12 months, it's number 2. So it's something of interest. UMAC underperforming. Going back on this one, it's just yes, underperforming in general, right? When we're looking at the relative strength, it's just also a stock in a different phase of its life cycle too. So it's going to be acting a little bit differently. Again, something I think like this spark. I didn't know about this name, and this is sparking my interest for sure. The main concerns being the depth that we're in the sideways action and the earnings coming up recently. But I also kind of understand what SAG is looking at in this one for sure. Just not my game. I think Parrot is worth watching. It has been recently picking up and keeping eyes on. Could you show me? Do you know the ticker for Parrot? Because I don't. But while we're looking at that, ONDS. All right. Let's make sure we got the right name. Wireless drones, private wireless drones. Okay. Oh, I guess I've looked at this before. As you can see, I have a drawing on here. Yeah, sales. I mean, the sales are beautiful on this. Sales super, super strong. Relative strength, 12-month great. Short term, not as great, but nothing. Increase in fund sponsorship. It's in that electronics. We know drones are somewhere a lot of us want to pay attention to. It's in that tech sector. Look, I love how tightly it's just kind of sideways trading. I definitely like that. Is this higher ATR? A little bit higher on the ATR. Like to come down to this shakeout level, we're looking at a 20% drop. But if we look maybe to these lows right here, it's about a 10% drop. For a stock like this, so I'm not really great at the whole head and shoulders thing. I'm still doing a lot of research on this. I don't know, and maybe somebody else can kind of tie into this, and I have no problem admitting that I don't know. We have shoulder, head, shoulder, below this shoulder, sideways action. Like, is this preparing itself for possibly a rollover situation? Who knows? Or is it preparing itself for that sideways action and then it breaks through this kind of sideways area and goes higher? I don't know. And I think that's also too where people talk about those failed breakouts make the best shorts. The failed shorts make the best long positions. So constructive, but I can also see some concern in just the price action and definitely underperforming recently. So it's not something I'd be interested in, but definitely something I'd be watching for me. PARRO. Nope, not what I typed. PARRO. Oh, French company. Is it not a US listed stock? That might be why. Might not be a US listed stock. That might be why. All right. Cool. So this is another name. Well, I'll just click a couple stocks that I've kind of been watching throughout this week. Circle. This goes into that, like, yes, is this maybe an underperforming stock? Is this possibly an IPO? Name that we kind of want to pay attention to? Yes, possibly. Is this falling into that blockchain group? Yes, which I've been seeing some strength there. Looked like it tried to break that downtrend there. Yeah, no worries. No worries, man. No big deal. No big deal. Where are you from? Are you in the US or are you abroad? Because that's always interesting to me to see where people are coming from. Um, so major downtrend in this. This is just something I've been kind of watching and seeing how it reacts here. I'm not going to buy it, but just something I've been watching. Still keeping an eye on this name. Still keeping an eye on Rocket Lab. Not going to say no because something stopped me out. But again, earnings coming around. So keeping an eye on this. This name right here, BE. Oh, God, I wish I was in this name. I've traded this name. We got the big earnings gap up, and I'm hoping we can get some flagging action, ideally. And that's why I'm watching this name. Hoping we can trade sideways. Hoping we can kind of keep a nice tight pattern, maybe keep the volatility inside of, let's see what 10% would look like. Like keep above those kind of lows and just move sideways, giving us essentially that like high tight flag type of action. So I'm really hoping we can get some sort of a high tight flag set up out of this. And I'm watching closely, but I'm not looking to buy it just yet because of how extended it is. High tight flag type setup. Let this thing go move sideways. Let these moving averages catch up. We've already had that explosive move. This has clearly been a leading stock that's broke out from this kind of pattern right here. The fundamentals are beautiful on this. This is something I'm very, very closely watching for a possible high tide flag setup. This is those tankers, and this is just gonna kind of sloppy, but it's still in my list, and gonna have some more names coming in there. European, living in France, dude. That's awesome. That's cool. Crazy to see you guys over in France watching this. So thank you. Appreciate the support coming from France. I know Mac. I think you're over in Pakistan, so I know we got people all over the world in here. Pretty cool. All right. I still got to do my weekend routine, so I don't really have a ton of stocks up here just yet. But with that being said, I was asked by Carlos over on Discord, said, can I cover my weekly and daily routine? 100%. So we just kind of went through when we looked at the overall market, we looked at the sectors, we looked at the industry groups. That's the start of my weekend routine and understanding the environment that I'm in and just getting to know the field right now to have a general context of the environment that I'm trading in. From there, in terms of my screening process over the weekend, I'm going to my industry group rankings, and I am taking the top 20 and I'm exporting all the stocks, both the primary that are driving the rankings and also the secondary that are not driving the rankings, but related to the group that's performing well. And I'm exporting that list into Deepvue. And that, for this week, because I did already do that, is this. 349 stocks falling into those top 20. I then have a screener that is based on these. So what I am doing is now I have all my weekend screeners. 1, 2, 3, 4, 5, 6 weekend screeners. And 2 watch lists, long-term watch lists and big names. This is just your mega cap names. That is all of the names that I am going through. If I am crunched for time, then I use this, which is a combo list. What this essentially is made up of, and I can kind of show you guys, and this is one of the reasons I love Deepvue. This combo list has all of those lists in one, and it is basically taking every single list results and just taking duplicates out. So I don't have to see the same name multiple times. It just speeds things up. Ideally, I like to go through my list individually, knowing what that screener is looking for. So it just tunes my mind to like what it is that I'm looking at. If I am pressed for time for some reason, I'm using this list because it takes out those duplicates and speed things up a little bit for me. However, let's just say ideal situation. I got plenty of time. I think we're back. We're back. All right. Sorry. I lost you guys for a second. Internet gave out. We're back though. So I don't know what was cut off, but again, ideally I'm going through that master list that has all of those lists. Really only if I'm pressed for time. If I have the time, I'm going through each of these individually. So to give you a breakdown, we have my perfect screener, which is essentially just it's like a perfect CANSLIM screener. I'm looking at the last quarter EPS, last quarter sales. I'm looking at the growth to see that there's in the yearly, I'm looking at the stage. I'm looking at kind of all of these things, relative strength to build out. My internet is acting funky. There we go. So this is like my perfect CANSLIM screen, super, super tight. 29 names coming up in there. Now this is my leading industry screen, and it doesn't matter the order that I go through these. For this screen, I'm taking that huge top 20 stock lists, and then I'm just filtering out names based on dollar volume, based on price, making sure it's above the 200 at the very least, and showing some sort of relative strength on one of these time frames. That trims that name down. And again, this is just, I'm trimming things down with these screens. It's going to be a big list. I like to look at stocks. I like to have a larger list. I probably look at it between 400 and 600 names every single weekend, and I'll explain how I go through that fairly quickly. So then this is my leading industry group list with the goal of looking at the stocks in the top 20. My next screen, fundamentals. This is my fundamental screen focusing on sales and earnings. Now, what really I love about this, and this is actually a good showcase of kind of why I love Deepvue screening process. My top group, I have my non-negotiables, which you can see there. My second group, I have my relative strength non-negotiables that I'm looking at over there. And then here I'm looking at any form of EPS. So either the last 3 quarters are averaging over 25%. The last quarter is averaging over 20%. The last 3 quarters are accelerating. The EPS rating is over 90, or if it doesn't have at least one of these, at least has triple digit sales. So this is what I love. It gives me that, okay, I'm okay with looking at something if it doesn't have this, as long as it has that. I'm okay with looking at something that doesn't have earnings, as long as it has really, really great sales. Same thing here. I'm okay with looking at something that doesn't have sales, as long as it has really, really great earnings. And that's what this any kind of filtering allows for me. I also got that on a yearly basis over here. And that gives me about 128 names, basically looking at a looser CANSLIM fundamentals than my perfect screen. Again, just adding another layer to the screening process. Damn, you have a Pain Pal on your watch list. I was wondering what that one was going to get out of the dust. Pain Pal. Oh, yeah, I hear you. I think you're talking about PayPal, but that's my big cap watch list. Relative strength. This screen is looking purely for relative strength. My non-negotiables plus strong relative strength on different time frames. 228 names. Again, larger list, but I'll show you how I kind of go through these pretty quickly. White belts. That's my fun name for my IPO stocks. Very, very simple. Looking at no ETFs, looking at average dollar volume, looking at things that have reported in the last year or IPO'd in the last year, and a price. 60 names IPOs, looking at IPOs because I look at those slightly differently than I look at my normal stocks. And then the Minervini Code 33, this is just his screen, 3 quarters of accelerating earnings, 3 quarters accelerating sales, 3 quarters of accelerating net profits, and over $15. Very, very tight list, but you can see gets some good names, Fastly and some of these other names that are definitely good. And then, like I said, I have my long-term watch list, which is when I see a name that I'm like, ooh, I want to not forget about this. I'll put that on my long-term watch list. And my big caps is just part of I always look at the big caps. So I will individually go through every single one of these screens and those 2 watch lists, which is producing anywhere between probably 400, 600 stocks. I know it sounds like a lot. What I will say is, like, if I'm going through this, I'm starting off normally on the weekly to give me a bigger context of things. And what I'm really looking at is, in the last like month or so, is there some sort of tightness, some sort of like maybe consolidation. And then I'll kind of click over the daily and just look and see if it's something that is of interest to me. If it is of any interest, it gets put on my watch list, the blue list. So what I'll do is I will check these off. And as you can see, this is already on there. I'll check off these names, and then I'll come over and I'll put them on my blue watch list. The reason I like this is because it gives me a color. I can skip over some of the stocks that are already on my watch list. If I see it's blue, I can skip over it. And then what I also like about Deepvue is I can be clicking. If I see something like, you can see my mouse is here, I can hit shift click, and I can check them off or take them off. So I am quickly going through, like right here, I'm looking at this, like this is extended, right? I can see this is extended. I'm probably not too concerned about this. But I'm looking generally at the weekly trend, looking at, is there some sort of consolidation forming? Do my fundamentals look, if that does come into play, then I'm looking quickly at my fundamentals, quickly at my daily, and being very, very broad. I'm not being super strict, and I'm just like, yeah, this is interesting. Yeah, that's interesting. Okay, that might be something. And building that other watch list. I will go from what is 400 to 600 stocks down to sometimes 50, sometimes 40, sometimes 100, sometimes 110. Once I'm going through all of these lists and I have just a general idea of these stocks are trending decently, the fund, maybe sometimes if I have an extra time, I'll even do the fundamentals at the point. Then I'm going to this bigger watch list. And now I am starting to go through this with a fine-tooth comb. This is where I'm digging through the fundamentals. I'm asking myself really what becomes 3 questions to me. Either this is a leading industry group, this is a leader in terms of RS, or this is a very, very strong fundamental stock. Those are those 3 things that I'm looking for. It has to have one of those. If it is not a leading industry group, if it is not a really, really strong RS name, and if it is not really, really strong fundamentals, I do not consider that as a stock that I'm interested in. I will then remove it from this list, and I will sometimes get this list down between 20 to sometimes even 50 names, 60 names. From there, once I trim that down, I'm now going down to my spotlight list. This list I keep at a max of 10. It's 10 names that I am actually looking at closely throughout the week. More often than not, those are 10 names that I think I might potentially buy. And that is my, what I call spotlight list, people call it focus list, going into the week. And then I'm getting a little more ingrained in this where I'm building possible plans for entering those names. That is my weekend routine. That is how I go through 400 to 600 names, normally fairly quickly, and then reduce that down to just say 100, and then reduce that down to 10. And that's the main criteria that I'm really looking for. It's either a leading industry, it is a very, very strong relative strength stock, or it is an exceptional fundamental stock. The more, the better. If it is an exceptional fundamental stock showing really, really strong relative strength and in a leading industry group, that's a home run. That's something that I'm really, really interested in. And perfect example, if you're looking at like MU, that was one of those. Exceptional fundamentals, exceptional relative strength, and a leading industry. SanDisk, same thing. A-Lab, same thing. Taiwan Semiconductor, I wouldn't say, I'd say, yeah, strong fundamentals, relative strength, leading group. All 3 of these actually checked off all 3. And then that's how I kind of narrow it down. So if I have 10 stocks that check off all 3, then I'm not too concerned about one that has 1 or 2 of those criteria met. And that's where I narrow things down. That's where I get from a big pool of stocks to what ultimately becomes part of my portfolio. The key, and this is something that I struggled with for a very, very long time, the key is being able to be a little stricter in some senses as you start getting towards the end of that routine. Being okay with, like, this could be a big leader, but it doesn't meet my criteria. And there are going to be plenty of stocks that do. And I used to get in the, like, ooh, this looks good because of this. That looks good because of this. Next thing you know, I got 50, 60 stocks I'm watching throughout the week, and I don't have a plan for any of them. So that is something. What made me follow Circle so closely is just to kind of turn around the Bitcoin and seeing that really the IPO. IPO, I look at things a little bit differently, right? So a little bit differently because it's more of an IPO type of name. Differently because this is a name that has is in that Bitcoin space, which I think I was seeing a lot more or strength in there. That's really what's kind of had me focus on this. If I'm being honest with myself, like I said, it's on here. I'm watching really closely. I didn't really buy it. I wasn't going to buy it. I probably had the opportunity on Friday to buy it. I'm also fully invested. So to answer your question, I probably shouldn't be watching this so closely, but I treat it a little differently just because it is an IPO and is in an emerging group that looks like it's possibly breaking an overall downtrend and turning around. So that's kind of the gist of it. But yeah, so that's the weekly routine. The daily routine, you guys see it. For anybody who looks at my write-ups on X, or anybody who looks at, I put the same write-ups in Discord and on Reddit and everything, and I share that kind of everywhere. That's my daily routine. I'm looking at the overall market. I'm looking at the sectors. I'm looking at the industry groups. I'm tracking my distribution days. I'm doing that same top-down analysis. The difference becomes on the screening side. The screening side is really, I have these lists, which I'm constantly improving. My up on volume, my gap up, which I think I want to get this a little stricter. Because, like, to me, like, that's good, but, I think I want to maybe stricten this up. Relative strength, I want to make this a little bit tighter. 52-week highs. This is something I like just looking at. And I'll quickly go through these names and see if there's anything that, number one, isn't on the watch list or something that maybe I have to pay attention to. I'll look at the leading industry watch lists. This is what this is. So any stock in those 20 that is on either my spotlight or my watch list goes into this, just so you can understand what I'm saying. The main thing has to be on that leading industry watch list. And then it could be also on either my spotlight or my watch list. So all the stocks from here that are on one of these two lists. I'll look through this quickly just to see if I screwed up over the weekend and disregarded something that maybe I shouldn't have that is turning around showing relative strength. I'll go through these really quickly, see if anything needs to be added, adjusted, and then I'm going through here. I'm looking through these really quickly, and then I'm looking at my portfolios, seeing if I need to change any of my stops, doing any sort of documentation, journaling, things like that, making any of my plans or adjusting any of my prior plans going into the next day, and that's it. And then when the market is open, it's pretty simple. I know what stocks that I'm possibly looking to buy. I will look over here just to see if there's anything crazy or something that's done some kind of change that is different. So I sometimes will quickly look through these names. And then I'll just keep an eye on my portfolio and see if anything needs to, I try not to get too move. I don't want to make any changes to my rules. I made those decisions the night before when there was no emotions involved. And I'm really just watching a lot of it for fun. And that's the gist of it. So you guys are getting the majority of my routine when you're seeing me live here and when you're looking and reading my daily write-ups. The only difference is you're obviously not doing the stock streaming process with me. And I do that in chunks. I really do. So like today at some point, I'll chip off one of these lists, then I'll chip off another one. If I got a little more time, then maybe sometimes I'll go through them all at once. And then a lot of times I take a break. And then I'll come back and then I'll go through my watch list. And all right, let me knock out any names that are definitely jumping off this list that I don't, for whatever reason, don't meet my criteria. It's coming off the list. Okay, that's gone. Then at the very end, normally sometime around Sunday, I have that solid watch list, and I'm going through that more with a fine-tooth comb and really trying to find what I think is the best to my criteria, and then building some plans based off of those. So that is essentially where I am at. Did I miss anything? Doesn't look like I missed anything. So yeah, I hope that helps. I'm kind of glad. I think we went through some good stuff. We talked a little bit about, obviously went through the usual routine. We talked about my weekend routine. Mac, that was a great question. Just talking about, things being extended and leading industry groups and laggards and what it means if you're trying to gain exposure in the market that has a lot of extended names and is how to handle essentially a lockout. Lockout is what we're really talking about. So, great question there. And look, just to kind of recap this whole thing, this market is beautifully strong. There's still the concern of a pullback. That's why we have a plan. Nobody knows what's going to happen. Know how you're going to handle his names. There's still earnings coming out, so make sure you know how you handle earnings. In Discord, especially for those in Discord, I put that IBD podcast interview that Jim Ropel talks pretty extensively about how he looks at earnings. It stuck so much in my mind that I wrote this in Discord. I could remember where I was, where he was talking about certain things. I remember the road I was driving on. I think it was 2021, 2022, because I was in my apartment and I was driving back to my apartment, and I know the exact road I was on. And I remember it just getting ingrained in my head where I'm like, this is something that has to become strict in my approach. And I need to have a really strong plan. And this is how I need to mentally look at these things. I'll actually post that over on, I'll post it on X2 for those who are not in Discord, so you guys can kind of see that. I think it's a really, really good listen, especially when we're in earnings season. So prepare yourself for the earnings kind of situation. Make sure you're not buying anything too close to earnings. Make sure you know what your plan is. If you're shorter on exposure and you didn't buy, or maybe you just got stopped out of a lot of stuff, and maybe you made some just wrong names that just didn't work out for you and you're lighter exposed. This is the thing with lockout rally. You don't want to not buy at all, but you don't want to put too much new exposure on too fast. So look for the top of the top. Look for where you really want to allocate your money and be just methodical in how you're increasing your risk. Do not just dive and put 60% risk on Monday morning at the open and then watch everything get stopped out. That's one of the things that's important within, because somebody who maybe did that last week on Monday and just dove into the market on Monday probably got stopped out of everything on Tuesday. And that can happen again. And remove emotions, have a plan. And that's why just look at things in general context. Turn off the news, look, I'm on social media, a lot of us on social media, but don't, know yourself. If it's going to start making you break some rules and it's going to start messing with your head, you're probably better off just removing yourself from it. Even Discord. I mean, I love our Discord. I love a lot of things. If it's going to distract you, maybe you're better off turning it off when the market's open and only looking at it and talking to people when the market's closed. Yeah. So just some notes there. But yeah, no. Yeah, anytime. I'm glad when you guys come into these chats and you guys answer all these questions, especially YouTube. I don't know what your deal is. There's some people on X watching right now. You're all quiet. Everybody on X is always quiet. Everybody on YouTube is always talking back and forth. But yeah, for you guys putting everything in the chat, it just makes this much more fun for me. It helps me become a better trader because it forces me to talk about things and really make sense of things that are going on in my head. And for me, it's the perfect way to start my weekend and get ready for my weekend routine to get ready to trade for next week. So I hope this is helpful. I'm stoked to see that there are people from all over the world, Pakistan, France. I know there's people obviously in the US and here and everywhere else. And to me, just that is absolutely crazy to me. And I can't be more thankful for you guys. And like I said, between this, Discord, X, everything, you guys have all really helped me become a better trader. So thank you for that. And stoked for the rest of this year. Hopefully the market that Jim Ropel's calling for is what we can kind of see, one of these legendary bull runs, and we could all continue to make money, outperform the market, and yeah, have some fun. So that's all we got. YouTube, you guys, there's X up there. X, there's the YouTube link up there. If you're catching this or caught this kind of in the midpoint of it, you want to watch the rest of it. It's always up on YouTube. You can also go back and watch. This is what I love about this too for me, and this is why I kind of started this originally. I can go back and look exactly what I was thinking and talking about, months ago. So feel free to even go back and look how I handled and what I talked about in terms of where the follow through day came around these last couple of weeks. If you're interested in Discord, link in the description of YouTube. And for anybody interested in Deepvue, I now have a free month trial code. It is in the YouTube description. On X, if you are interested, just shoot me a message. I got to update my profile to put that in there. But I also have the free, 12% off an annual membership code. So use my link, which is both in the YouTube and also in the Discord. It's in Discord, but in YouTube and in X. And then use those codes to take advantage of either the free month or the 12% off of the annual membership. But yeah, that's all I got. Appreciate everybody, and I'll see you guys next week. As I always say, stay disciplined.